I spoke to Dan Geltrude, or America's Accountant. So Dan, being America's Accountant and tax season, coming up real fast, you must have some tips for us, right?
Of course. Listen, the one thing that we should focus in on here are what the common mistakes are, because those are the little things that can get you in a lot of trouble. And these are simple things. Let me start with this. Many times people use the incorrect Social Security number, which means that your tax return is not going to be properly accounted for. Also, people put the numbers on the wrong lines. Again, simple thing, but problematic. One of the other points, too, is incorrect information. This comes into play quite a bit related to missing 1099, so the return ends up being incomplete. Another point here is the wrong filing status. Maybe you're married and you accidentally put in single. Not going to work. One of the other points, too, is people forget about profits on cryptocurrency. One of those things that gets overlooked, again, quite simple, but also common mistakes. If you could avoid those things, you'll really be in good shape for this filing season.
Next question, how do you avoid getting audited?
Well, here's the way it works. To start with, there is a audit lottery. So you could be unlucky and end up winning, and then you end up having an audit. But there are other matters that come into play here. So as people have heard the phrase, red flags. Let's talk about what those red flags potentially are. First, when you fail to report all of your income, red flag. Another thing is high income earners have the tendency to be selected for audit more than others. Also, people who forget to file their tax returns or haven't filed in a while, those end up getting picked up where the IRS is going to come calling to say, you owe us more money potentially. We want to see what's going on. Then there's another group of people who have higher than average deductions. So the IRS has so much data that they have the ability to analyze, and when they see people, and it doesn't mean it's wrong, by the way, but when they see people are taking more deductions than what the normal taxpayer would do, that potentially puts you in a position to be selected for audit. And then there's two more I want to mention real quick. Large charitable deductions, that's one of the red flags, and also people who file what's called a Schedule C, which means you are someone who is a sole proprietor running a business. Those have a high selection rate for audit as well.
Dan, let me just ask a sidebar question here. The IRS has said that it's going to increase its workforce. Does that mean more audits?
Well, potentially, yes, right? Because the way the IRS increases getting more money is to go out there and check on people to make sure they're paying what they're supposed to. So when the IRS is talking about increasing their resources, part of that is yes, they want to do more audits and try to increase tax revenues for the federal government.
All right, last question here, Dan. Any major law changes that should be on our radar?
One of the things that is going to be changing is because of inflation, the tax brackets have been adjusted. And this is actually good news. Because of inflation, it means the brackets have moved up, which means you have to make more money to shift into the next higher bracket. Now, of course, that's calculated automatically, but that's one of the big changes, but it's good news for all of us.
All right, America's Accountant, always great speaking to you.
Thank you.